Warning critical update, a massive Bitcoin supply shock is happening right now. Institutions are buying up BTC at a record pace, with spot ETFs pulling in over $3.2 billion in a single week, the second best on record. This is happening while the amount of Bitcoin on exchanges hits a 6-year low. This powerful combination is pushing Bitcoin's price toward its all-time high, with some analysts now calling for $150,000 to $200,000 by the end of 2025. At the same time, trillions of dollars are expected to flow from money markets into altcoins, potentially kicking off an explosive alt season. With major regulatory hurdles being cleared and giants like Grayscale filing for new altcoin ETFs, the stage is set for a significant market shift. You need to see this before making your next move. In the latest video from Altcoin Daily Channel, the host argues that a massive supply shock is coming for Bitcoin. The amount of Bitcoin on exchanges has hit a 6-year low, just as Bitcoin ETFs saw their second best week ever with $3.2 billion in inflows. This shrinking supply and rising demand setup has prompted Cathie Wood's ARK Invest to update its 5 to 10-year Bitcoin forecast to $2.4 million. The video also makes a strong case for Ethereum, suggesting it's having a Bitcoin 2017 moment. With growing institutional adoption and its role as a corporate treasury asset, Ethereum is becoming the preferred choice for Wall Street to build the future of finance on-chain. This is leading to predictions of a potential $16,000 price for ETH. Solana is also featured as a key player, with its decentralized exchange volume jumping 21% in Q3 and significant ETF inflows of its own. The video frames Solana and Ethereum as the top contenders to become the foundational layer for tokenizing traditional assets like stocks and bonds. Major banks are reportedly predicting Bitcoin could reach as high as $200,000 by the end of 2025. The video's core arguments about a supply squeeze driven by institutional demand hold up well against current market conditions. As of early October 2025, Bitcoin is trading around $122,000 to $123,000, pushing close to its all-time high. This price action is happening alongside a massive surge in spot Bitcoin ETF inflows, which saw a net positive of $3.24 billion in just 1 week, the second best week on record. This confirms the video's point that institutional products are absorbing a significant amount of Bitcoin from the market. Ethereum is currently trading at approximately $4,500, while the video's $16,000 prediction seems ambitious for the immediate term. The narrative around institutional adoption is strengthening. Reports show billions in institutional ETH holdings accumulated recently, and upcoming network upgrades like Fusaka are expected to improve scalability and attract more institutional players. Solana, trading around $227, is also seeing strong ecosystem growth. On-chain data reveals significant increases in trading volume and total value locked, with billions in assets being bridged to its network, supporting the video's claim of its rising prominence. The general market sentiment is quite bullish, with the total crypto market cap exceeding $4.2 trillion, fueled by expectations of Federal Reserve rate cuts and Bitcoin living up to its historical October trend. The video's 2025 price targets, especially for Bitcoin, align with several current analyst predictions that see prices potentially reaching $150,000 to $200,000 by year-end if the strong ETF demand continues. In the latest video from CryptoRover channel, the host explains that Bitcoin's current pump is driven by a combination of factors that mirror the run-up of October 2020. Historically, the fourth quarter of the year is the most bullish period for crypto. This seasonal trend is now combined with renewed institutional interest, shown by BlackRock's recent purchase of $790 million in Bitcoin. Another element is the news that President Trump is considering a stimulus check of $1,000 to $2,000 for taxpayers, which could inject more money into the crypto market, much like it did in 2020. Based on a W-shaped pattern, the technical price target for Bitcoin is $127,000. The host believes the final exponential stage of the bull market is approaching and could peak in the next 3 to 4 weeks. His personal target to take profits on his Bitcoin trades is $137,000. The video also mentions that Ethereum looks very strong, forming a bull flag pattern while consolidating under its all-time high. A breakout above $4,700 would be a strong confirmation for a move toward his target of $6,343. The video's analysis leans heavily on historical patterns from 2020, which is an interesting parallel but not a guarantee. The mention of institutional buying is on point. Just this past week, U.S. spot Bitcoin ETFs saw their second highest weekly inflow ever, pulling in $3.24 billion, with BlackRock's IBIT alone accounting for $1.8 billion. This confirms that big players are indeed stepping in. Bitcoin is currently trading around $122,000 to $123,000, which is very close to its all-time high of about $124,000. The video's price target of $127,000 to $137,000 seems ambitious, but not entirely out of reach if this momentum continues. The stimulus check idea, however, is still just talk. No legislation has been passed to authorize new checks. Ethereum is trading at around $4,500, below the video's key confirmation level of $4,700 and its all-time high of roughly $4,950. While its chart does show potential, it hasn't broken out just yet. The market sentiment is clearly optimistic, with the fear and greed index moving up, but the reliance on a 2020 repeat and unconfirmed stimulus news should be viewed with caution. In the latest video from Crypto Tips channel, the host argues that the single greatest danger to your crypto portfolio isn't the market or regulators, but your own mind. Many investors lose money not because they pick the wrong assets, but because they fall into predictable psychological traps. Behavioral finance suggests a huge number of retail investors are affected by these biases, which are even more intense in the emotional crypto market. The video identifies several key biases, including overconfidence after a few wins, loss aversion, where losing hurts twice as much as winning feels good, and confirmation bias, where you only seek out information that supports your existing beliefs. Other major traps discussed are herd mentality, where you follow the crowd without doing your own thinking, and anchoring, where you get stuck on a specific price point, like your entry price. The video explains how these biases often combine, creating dangerous loops. For example, early success leads to overconfidence, which is then reinforced by only looking for positive news. The presenter offers practical ways to fight these tendencies, such as setting rules before you trade, forcing yourself to consider opposing views, and using waiting periods to let emotions cool down before making a move. Ultimately, the key to long-term success is creating distance between your emotions and your financial decisions. This video's focus on investor psychology is incredibly relevant right now. The market is showing strong bullish signs, with Bitcoin pushing toward its all-time high of around $124,480. Currently, Bitcoin is trading near $123,874, sparking a lot of excitement. This is a perfect environment for the biases mentioned in the video to take hold. The crypto fear and greed index has jumped to 71, firmly in greed territory, up from 63 just a day before. This shows that recency bias and herd mentality are likely kicking in, as investors see rising prices and jump in, assuming the trend will continue indefinitely. We're also seeing this optimism in major altcoins, with Ethereum trading around $4,458 and showing strong quarterly gains. The recent regulatory clarity from the SEC, such as allowing state-chartered trusts to custody crypto and reclassifying XRP as a utility token, is only adding to the positive sentiment. While this news is good for the industry, it can amplify overconfidence. Investors might start to believe that the risks have vanished, ignoring the inherent volatility of the market. The video's advice to set rules and maintain emotional distance is more important than ever in a market that feels this euphoric. In the latest video from Lark Davis' channel, he discusses a prediction from Bitwise's Matt Hogan that the number of corporations holding Bitcoin on their balance sheets is set to double in the next year. This idea is coupled with an expectation of accelerating Bitcoin ETF inflows in the fourth quarter. Lark Davis uses this as a jumping-off point to project the future of the altcoin market. By analyzing institutional buying trends since the launch of U.S. Bitcoin ETFs in January 2024, he calculates that institutions have been acquiring an average of 70,000 Bitcoin per month. The video's core argument that institutional adoption is reshaping crypto market cycles is more relevant now than ever. The prediction of an extended cycle, breaking from the historical 4-year pattern, is a major topic of discussion in the market. The video's data-driven approach, while based on past performance, provides a logical framework for this theory. As of early October 2025, the market is showing strong bullish signs, with Bitcoin trading around $122,000 to $123,000, very close to its all-time high. In the latest video from the Cowen channel, the main topic is the U.S. labor market and its connection to Bitcoin. But there's a twist. A U.S. government shutdown means the official Bureau of Labor Statistics (BLS) data isn't available. To get around this, Cowen looks at an estimate from the Chicago Fed, which puts the September unemployment rate at about 4.34%, a slight increase from the previous month's 4.32%. Other data points show a mixed but generally softening labor market. Job openings have ticked up slightly to 7.23 million, but they've been mostly flat for a year. More telling is that the rate of people quitting their jobs has dropped to a cycle low of 1.9%, suggesting workers are less confident about finding new positions. Despite this, layoffs remain low and are still around pre-pandemic levels. The video also notes that private payroll data from ADP showed 2 consecutive negative months, with a revised -3K jobs in August and -32K in September. The video's focus on a government shutdown halting economic data is timely, as a similar situation is playing out right now. The reliance on alternative indicators like ADP and Chicago Fed estimates in the video mirrors the current real-world scenario where the official September jobs report is delayed. The video's data showed private payrolls declining by 32,000 in September, a signal of a cooling labor market. The most recent JOLTS report for August showed job openings were mostly flat at 7.2 million, confirming the trend of a slowing, but not collapsing, labor market. The unemployment rate in August was 4.3%. In the latest video from Coin Bureau channel, Guy explains that MetaMask is finally launching its own token, likely called Mask. For years, people have guessed this might happen, especially after hints back in 2021. The main holdup was regulatory issues, specifically a lawsuit from the SEC against MetaMask's parent company, CryptoSrus. That lawsuit was dropped in February 2025, clearing the path for the token launch. CryptoSrus CEO Joe Lubin has since confirmed the Mask token is coming, possibly sooner than expected. The excitement around the MetaMask airdrop is happening at a very interesting time for the crypto market. Bitcoin is currently trading near $122,000, not far from its all-time high, and Ethereum is holding strong around $4,500. This October rally has the total crypto market cap over $4.2 trillion, showing strong investor confidence. Injecting what could be a multi-billion-dollar airdrop into this already heated market could act as a significant catalyst. The video correctly points out the regulatory hurdles that delay this, but the landscape has shifted in 2025. With the SEC closing investigations and providing clear paths for crypto companies, a major player like CryptoSrus feels comfortable moving forward. In the latest video from CryptosRus channel, the host discusses a strong day for the crypto and tech markets. Bitcoin is trading around $120,000, with Ethereum at $4,500. Solana saw a significant jump of over 5% following positive news. Tech stocks with crypto connections like Coinbase and Robinhood also had a good day, with Coinbase up about 8%. The U.S. government shutdown is seemingly having no negative effect on the market's bullish sentiment. Tom Lee of Fundstrat remains optimistic about the S&P 500, predicting it could reach 7,000. JP Morgan has forecasted that Bitcoin could hit $165,000 by the end of the year, a figure the host considers conservative, suggesting it could go above $200,000. The main driver for Solana's recent price action is the announcement from Vision AI, which plans to build a $2 billion treasury for Solana. Another company is also reportedly raising $100 million to purchase Solana. The host believes Solana could surpass $1,000 in the upcoming altcoin season, especially with the potential for a spot Solana ETF approval and future interest rate cuts. The video captures a moment of high optimism in the market, with price points like Bitcoin at $120,000 and Ethereum at $4,500. As of today, Bitcoin is trading around $122,013 and Ethereum is near $4,485, indicating that the bullish momentum mentioned has continued. The prediction from JP Morgan for Bitcoin to reach $165,000 by year-end still appears to be in play, especially as institutional interest continues to be a factor. Tom Lee's forecast for the S&P 500 is also noteworthy. The index is currently trading around 6,715, surpassing his lower-end prediction of 6,600. In the latest video from Crypto Banter channel, Paolo Ardoino, the CEO of Tether, shares his journey and the company's strategy. Starting as a software developer, he became involved with Bitfinex and eventually took the helm at Tether in 2023. He explains that Tether's explosive growth began during the 2020 pandemic when lockdowns in emerging markets pushed people towards digital dollars like USDT. Ardoino recounts a major stress test in 2022 following the Terra Luna collapse, where hedge funds attempted a coordinated short attack. Tether processed an incredible $7 billion in redemptions in just 48 hours and $25 billion over 20 days. Proving its liquidity in a way no traditional bank has ever survived. He describes Tether as a hybrid tech and asset management firm that maintains high profitability by owning its distribution channels, investing in a network of over 120 companies in developing nations. Looking ahead, Tether is not building its own blockchain, but is instead supporting the broader ecosystem. They plan to release an open-source wallet development kit to simplify wallet creation for everything from phones to smart fridges, and are also expanding into artificial intelligence. Paolo Ardoino's description of Tether as a fintech company focused on the unbanked is a compelling narrative that shifts the conversation away from the typical Wall Street perspective. His emphasis on owning distribution in emerging markets is a classic business strategy that has proven incredibly effective. While competitors focus on the crowded and highly regulated Western markets, Tether is building an empire in plain sight. Currently, Bitcoin is trading around $122,000, and the total stablecoin market cap has just crossed the $300 billion mark for the first time. Tether's USDT makes up a dominant share of this, with a market cap of approximately $176 billion. This shows that despite past controversies, the market continues to trust and use USDT on a massive scale. The upcoming open-source wallet development kit and the push into AI are strategic moves that could further cement Tether's position, making its technology a fundamental layer for a new decentralized economy. However, the regulatory landscape is changing. The U.S. passed the Genius Act in July 2025, creating the first major federal framework for stablecoins, which will require issuers to hold 100% liquid reserves and increase transparency. While Tether has been working towards this, the new rules will bring increased scrutiny and competition from compliant, U.S.-based issuers. In the latest video from Crypto Casey, she breaks down billionaire investor Ray Dalio's framework for understanding major historical shifts. Dalio points to 5 big forces that drive 50 to 80-year cycles of change: the money and debt situation, internal conflict within nations, external geopolitical conflict, acts of nature, and human inventiveness, especially new technology. The video suggests we're seeing all 5 forces at play right now. The massive U.S. national debt, mentioned as over $37 trillion, is causing people to look at assets like Bitcoin. This economic stress is connected to intense political division. On the world stage, a power struggle is unfolding, particularly between the U.S. and China in the race for technological dominance in AI and blockchain. The video proposes a fascinating idea that the U.S. might pivot its debt-based dollar to an equity-based one, backed by assets like Bitcoin and other major cryptocurrencies. This could be a strategic move to maintain global dominance and manage its staggering debt, with pro-crypto policies and legislation like the Genius Act and Stablecoin Act paving the way. The video's application of Ray Dalio's cycle theory to the current moment is quite compelling, especially its focus on the technology arms race. Dalio himself has recently warned that rising debt and political division are pushing countries like the U.S. toward a crisis point. The U.S. national debt has indeed surpassed the $37 trillion mark mentioned in the video, now standing at approximately $37.86 trillion. The idea of backing the dollar with Bitcoin, which might have seemed outlandish a few years ago, feels less so in today's context. Bitcoin is currently trading around $121,788, with Ethereum at $4,454 and Solana at $225. These prices reflect a significant and growing market. In the latest video from DataDash, host Paul Sampson looks at Bitcoin's recent surge to $120,000, questioning if it's a genuine rally or just a bull trap. Using technical analysis, he points to a potential crab harmonic pattern that could push Bitcoin's price toward $130,000. He notes that strong bullish absorption and key support around the $117,000 level suggest the upward trend has strength. Sampson also extends his analysis to major altcoins. For Ethereum, after a significant run-up from $2,200 and a subsequent 22% pullback, he sees it holding a critical support level at $3,870, with future targets of $4,500 and then a range of $5,000 to $5,600. Solana is showing a bullish shark pattern and holding above the $196 mark, with Sampson anticipating a move towards $274 and $323 in the coming weeks. Lastly, he mentions that Chainlink, after a 30% correction, is holding support at $21 and is positioned for a potential rally to $38. Throughout the video, he references how these setups were shared in advance with his DataDash Pro Discord community. The technical analysis in the video is interesting, but it's completely detached from the current market reality. The host discusses Bitcoin trading at $120,000 and aiming for $130,000, which reflects the market's current state as of early October 2025, where Bitcoin is indeed trading around $122,000 to $123,752. This October surge is bringing Bitcoin close to its all-time high, fueled by institutional interest and investors seeking a safe haven during the U.S. government shutdown. Similarly, the predictions for altcoins align with current conditions. Ethereum is trading at approximately $4,487, well within the video's analyzed support and resistance zones. Solana is currently priced around $227, which is between the video's support of $196 and the next target of $274. Chainlink is trading at about $22, having held the $21 support level mentioned and now facing the path toward the $38 target. The analysis presented in the video, while using hypothetical numbers from a past context, has turned out to be remarkably predictive of the actual market movements we are seeing now. The patterns identified for a continued rally are playing out, with the entire crypto market cap exceeding $4.2 trillion. In the latest video from CryptoWendy, the discussion centers on two important pieces of crypto legislation in the United States: the Genius Act and the Clarity Act. The Genius Act, which is already law, allows people to earn rewards on their stable coins. However, banks are reportedly lobbying against this, trying to ban these rewards. Brian Armstrong from Coinbase is shown advocating in Washington, D.C. to protect the ability of Americans to earn these rewards. The video then turns to the Clarity Act, which has been passed by the House and is now with the Senate. This act is designed to create clear rules for the crypto industry. A major goal is to define whether a digital asset is a security or a commodity, a distinction that has big implications for things like crypto ETFs and the ability of crypto companies to operate in the U.S. The Clarity Act also aims to give the CFTC more authority over digital commodities and limit the SEC's power over assets that aren't proven to be securities, all in an effort to support growth and reduce legal confusion for crypto developers and investors. The conversation in the video about the Genius Act and the Clarity Act is timely, though the names might be slightly different from the official bills making their way through Washington. The bill most similar to the Clarity Act is the Financial Innovation and Technology for the 21st Century Act, FIT21, which passed the House with bipartisan support in May 2024 and now awaits Senate consideration. This legislation is indeed a big deal, as it aims to draw clearer lines between what the SEC and the CFTC regulate, a point of major friction and uncertainty for the industry. The Genius Act mentioned appears to be the guiding and establishing national innovation for U.S. Stablecoins Act of 2025, Genius Act, which was signed into law in July 2025, focusing on stablecoin regulation. In the latest video from The Modern Investor, the discussion centers on two major developments: a company named BitMine relentlessly buying up Ethereum and Grayscale filing for a wave of new altcoin ETFs. BitMine has now gathered 2 million Ether, positioning itself as the largest corporate holder of ETH. Their stated goal is to eventually own 5% of Ethereum's total supply, and they've already secured 1.71%. The company's chairman, Tom Lee, believes a super cycle is coming for Ethereum, driven by Wall Street and AI adoption. On another front, Grayscale is actively filing to create new ETFs for several altcoins, including older names like Bitcoin Cash and Litecoin, as well as Hedera Hashgraph. This move follows previous filings for other popular coins like Solana and XRP, suggesting a broader strategy to bring more crypto assets to traditional markets. The host mentions predictions of a $25,000 Ethereum price between 2027 and 2028. The video's focus on BitMine's accumulation and Grayscale's ETF filings paints a clear picture of institutional preparation. The information on BitMine is slightly dated. Recent reports from late September 2025 show their holdings have already grown from 2 million to over 2.65 million ETH. This aggressive buying, now representing over 2.2% of Ethereum circulating supply, is a massive vote of confidence. With Ethereum currently trading around $4,490, their stash is worth nearly $12 billion, far exceeding the figures mentioned in the video. This relentless accumulation by a single entity could indeed create a supply squeeze, especially as institutional demand from ETF inflows is also picking up. In the latest video from Becker channel, the host lays out his forecast for a massive altcoin season set to unfold in Q4. He argues that the recent market pumps are just a small taste of what's to come. The core of his theory is that a staggering $7.3 trillion currently sitting in money markets will soon flood into riskier assets like crypto as interest rates decline. This massive injection of cash is expected to trigger an explosive rally across various altcoin sectors. Becker's extremely bullish take is definitely catching the current market winds. The general sentiment is leaning toward greed, And narratives like AI, DEPIN, and RWA are indeed gaining serious traction in Q4 2025. We're seeing institutional interest continue to grow, with firms like Nomura's Laser Digital entering the Japanese market and Coinbase's institutional services expanding. This aligns with Becker's thesis that big money is getting ready to move. Bitcoin is currently consolidating above $120,000, and Ethereum is holding strong around $4,500, providing a stable base for altcoins to potentially run. In the latest video from Jebb channel, the host lays out 10 reasons for an impending massive rally for Bitcoin. He mentions that Bitcoin recently broke above $121,000, surpassing a critical technical level identified as the Fibonacci Golden Pocket. This breakout, combined with the formation of an inverse head and shoulders pattern, points to a potential price target of $130,000. Another factor is the surge in gold's price to nearly $4,000 an ounce, driven by a lack of confidence in fiat currencies. Historically, Bitcoin's price movement follows gold's with a lag. The strong performance of the U.S. stock market is also seen as a positive sign, giving investors the confidence to move into what they consider risk on assets like Bitcoin. The video presents a highly optimistic case for Bitcoin, citing technical patterns, institutional adoption, and historical trends with price targets of $130,000 and even $199,000. The presenter's forecast hinges on price points like $118,000 and $121,000, which aligns with the current market. As of early October 2025, Bitcoin is indeed trading around $122,000, challenging its all-time high of about $124,400. This makes the video's analysis surprisingly relevant.